Hi, everyone, and welcome to another webinar, another event online hosted by Pak Launch. As always, thank you for being here. Good morning, good evening, good afternoon, wherever you are. Today, we're going to be talking about startups and specifically the important considerations that angel investors have when they invest in startups. So for all of you who are listening, let's start off by first introducing you to our panel who have kindly taken out the time to be here and to inform us. And we're very grateful that they've done this. We're joined today by Dr. Danish Bhatti. He is the neurology chair of the University of Central Florida. Thank you very much, Dr. Bhatti, for taking out the time, as always. We're joined by Mohammed Hadi. He's the director for Malafi. Hi, Mr. Hadi. It's a pleasure to meet you.
Wow.
We're joined by Ahmed Malik, who is the founder of Sparrow Labs. Assalamu alaikum. Thank you very much for being here. And we're joined by Anis Khawaja, who is the director of the Mahmood Group of Industry. Assalamu alaikum. Thank you very much. I think the first question that I'm going to jump into very quickly, and I'd like all of you to sort of, give me or give our audience your perspective on this, is that what do angel investors specifically look for, when they are approached by a startup? And I want you to answer this bearing in mind that what is the preparatory work that any person who has a startup should have actually invested in when they approach you? And we can start off with you, Dr. Danish.
Why don't we go last, because I'm very non-traditional in terms of our evaluation. Let me hear what others have to say.
Okay, so let's jump in. Hadi, would you like to tell us?
Sure. I mean, look, from my perspective, I think there are three things that I'm really looking for in terms of when you talk about preparatory work, and when we were talking specifically around. I mean, if we bucket this into three areas, so let's say founders themselves, and then what is the problem that you're trying to solve? And then most importantly, the other thing that comes to mind is the feasibility of the business. And when you combine the three together, you're really looking for a lot of things in terms of what is your, how well gelled are you? What is your level of commitment? Is your business plan well thought of? I mean, I'm not trying to say cookie cutter stuff, but majority of the times what we are looking into pitches and stuff like that, you have a really good business plan that might have good numbers, but it may not translate into the best tech, or the other way around, right? And a lot of those times, if there are businesses that are very niche or very early as well, they need to have a good strategy and a good approach for us to be able to understand what the founders are looking for in the near future, and how investable that business is, even if it is mature many years down the line as well, because it may be relevant at the time that they started, and it may not be so relevant today, but there may be things that they're trying to do in the near future that would make sense. So there's a lot of things that could come into this, and I don't want to take a lot of time because I maybe jump in here and there, but majority of the times we need to be able to figure out if the challenges and their mitigations and their preventions are into place while in the journey of this any startup, and if they have a good way of putting that forward and be able to demonstrate that they are there, and all of this is going to be very, very let's say upfront if we see that the founders have a good chemistry. And if they are committed to this from not only their day-to-day, but they are in this in terms of being humble and understanding that there's probably feedback that's going to be coming their way, right? So this is very important.
Okay. Emma, do you have anything to add to what Hadi just said? Because it seems that the list of things that any startup would have to cover are pretty intense. You know what I mean? Like, right. It would require quite a bit of preparatory work, just like in terms of presentation, but on the legal side and so on and so forth. Are you as intricacy, sort of as detail oriented when people approach you?
Right. Short answer is not as much. I definitely agree with Hadi on having that base fundamentals and very strong things you've thought through. But eventually, I think by default, the asset class of angel investing is you're so early on that essentially most people, in my opinion, are taking a flyer on the team and generally the idea on where it is. And most startups would have pivoted multiple times. Like within the startup space, the friends that I have or the companies that I know of, very rarely do they start with something and then actually end up doing that over 2-3 years. There's so many pivots. From my perspective, it is as much of an art as it's science. And there's so many factors in that, right? Like, from a startup's perspective, if you're raising, if you're, let's say, doing life sciences or something like that, if you, maybe somebody who works in energy as an angel investor may not even understand, right? So you have to find your, micro level, like a product market fit, even from a startup raising perspective, that if you have people within that space, and then within that, there's some people with very high signal, right? If you're working on transportation and you can get the founder of Uber to invest, for example, they may literally write maybe a small, very small check, but that signal for you is very big. So, you have to be very strategic about also like what you as a startup want. From the angels perspective, because they're so early on, it's mostly, I would say that, people look at the team, you're looking at if things have been thought through. I always say, well, you should have some sort of a financial model. It might be based on complete nonsense assumptions, but you should be able to defend those assumptions. And somebody who's done valuation and M&A and like appraisals for a living, even I understand that a lot of that stuff is just basically inputs. Have you thought through these things? Almost all of it is going to be wrong. But then do you as a team have the resilience and the common sense to kind of go and, deal with all this stuff as you go along? That, as much as you can judge so early on from a few conversations, is usually very important to angels, in addition to just really liking, a business idea a lot. It's a numbers game, right? You make 1 or 2 investments, maybe a 10, 12, one workout, right? So the angel investors usually are also, not always very sure that each investment's gonna make it big, but if you can frame it from the perspective of make the angel think why not versus why, that's a good framework to kind of follow.
Well, thank you. Anisa, I'd like to come to you. Look, at the end of the day, I think we can broadly expect any angel investor to have to wait for at least minimum 5 to 7 years, really, to really see where the investment is headed, and putting in money into an idea, and as Emma just mentioned, it's not really, there's no guarantee that's going to come to fruition or the numbers that it will actually result in. How do you sort of discern and decide whom to entertain, like which ones to select, or in fact, which ones to actually sort of narrow down from all the multiple people who probably approach you?
Before I go into the answer of this question, I would just want to say that, first of all, what Hadi and Emma have said pretty much sums up everything. But I think coming in from a traditional business family and, doing more of manufacturing concerns, and with this journey of the last few years where with my brother, my friend, Shoaib Zaid Malik, we were taught actually how the startup industry works. One of the things that we try to really focus on is the founder himself and how much of a grit the founder has, where practically what Ahmed was just saying, that, how many times they're going to pivot, how many times they're ready to change and adapt, and they have the grit to fail and pick up themselves and then improve on it and be ready to adapt. And the recent times we've seen that happening, that a lot of the startups, they, at least the ones we were invested with, they were active, they were ready to respond to the current crisis which came in. So for me, I think to start with, and what I've learned with, is that how strong a founder themselves is. And one more thing which has been highlighted with some of the recent events, and because Pakistan is again I believe a maturing ecosystem of startup, is what kind of governance structure are there in these companies. And I feel that is an equal responsibility of the founder, the startup itself, as well as the investors or the board as well. That we really need to see that how strong that startup or founder will be focusing on governance structures as well. And I think lastly, the team, the HR, the kind of people that are being actually brought in, or the core team which is out there, if it is not a single founder, that how strong that team is, what kind of skill set they bring in on the table, and how they fill in the gaps for a problem they're trying to solve. So I feel these three things would really matter.
Thank you. So my next question would be, what really makes an angel investor different from a VC? And how do you decide which is better suited for your startup as an entrepreneur? And I'm going to leave the floor open, and whoever wants to jump in is welcome to answer the question first. Okay, nobody's jumping in. So let's start with this. Okay, Adi.
You're all
Everybody's like, okay, all right, Hadi. So what makes
Everybody.
an angel investor different from a VC, and what can a person or a startup or an entrepreneur expect to be different when we approach?
Yeah, I mean, look, it's a good question. I think one of the things that, as an angel investor, I mean, I sort of got into a syndicate to really get my hands dirty along the way. But for me, the perspective is, what is it that the startup is looking for, right? So are they looking for advisors that can guide them in terms of what their strategy and their approach is? Or is there an angel investor that is there that can use their network to make them go forward, push the needle, so to speak? Or is there, a blitz scaling that is required, for example, from a perspective of just, going to market, or even scaling to different markets? These are the questions that the startups would be, pretty privy to in terms of what their way of spending their equity is going to be. But from an angel's perspective, my take is, I look for startups who I can be vested in terms of how close can I get with the founders in terms of really working with them, finding out if they are if they need anything that will help make their lives better in terms of investing, or in terms of just moving their business along in a way. But not to get so invested that it's going to become like operational day to day, but in a way that is going to pivot them, let's say, or even advisory sake, from that perspective, and ability to influence wherever required. I think is going to be nice, and having an open communication with your investors is always key for any startup, right? So.
Okay, Danish, I'd like to come to you. So same question, just I'm going to throw a little bit of spin on it. When you invest in a startup, how much equity do you traditionally expect to buy into, and how involved do you get with the startups? Like, how much guidance are you providing? What is the level of involvement?
So I, belong to this group of physicians who are investing. So we're, all practicing physicians, about 40 of us who are in this group. Just because we're practicing physicians and we are the end user of the product, we are very product focused, maybe much more so than looking at the team or looking at the business model. What we want to see is that what's the product, what's the angle, what it's going to do, what problem is going to solve. And a lot of time we have someone in our group or within our circle who actually we can reach out to and say, okay, now, what do you think this is a pain point? Do you think it's something that will have traction? Is it something there'll be demand for? So when, we are very much involved, to one part of your question, because once we like the idea and we're sold on the product, we can see the traction, we can see where it can go. Then we want to guide it to there or shape it to that, make sure the product have the elements or features needed for the end user, whether it be our patients or physicians themselves. So we're extremely involved, and we want to go into something that we are sold on the idea and success and can be actively involved or not. In terms of equity expectations, was the second part.
Just to interject a little bit before equity. So you're saying you're more interested in, or equally interested, I would assume, in the product as much as you are in the person behind the product or the team. But what if there are any compatibility issues with the team, moving forward once you've invested? How do you manage those?
I think, to be honest, assessing someone unless they have a previous proven track record, it's a really difficult shot. You're always taking that chance that it will, when they are presenting to you, they're presenting their best self. So, you could have some kind of a red flags, but it's easy to be fooled through. So there will always be those challenges. As long as you are aligned on the product side, you can take the personalities out and just focus on the results and outcome. So far we haven't had any big compatibility issues with the team. And as I said, if we are sure we're going to have an active role in product development, that's when we go in. Otherwise, we don't. We're not passive investors. So if we don't seeing that buy-in from the team, we don't go in. So we don't take too many shots at too many.
I'm going to circle back to the equity question with you, but because I want to add another bit dimension to that
Sure.
too. And what about you? Like, what is your take on this? Is it product? Is it person? Is it a combination of both? I'm guessing.
It definitely is a combination of both, I would say. But again, I think you could, if you have an amazing person or people, they could do a lot with the mediocre product, but it's not true the other way around. You could have the best product ever, and without the proper execution, which already is so hard, you get nowhere, so the people matter a lot, in my opinion. And then they have to have, I see a lot of brilliant people spending a big portion of their professional lives on products that they're not going anywhere, right? That's sad to see. So finding that fit is so important. And it is not always there. If it is, chances are of a home run, given everything else works out, are very high. But people first any given day, because if you think about it, it's nothing more than a group of people. Even the product is whatever they thought of and whatever the customers told them. And the rest works out. I'm sure there's exceptions to that, where there's phenomenal product and the team is just okay and things chug along. But in fast-paced, like VC-funded growth models, if you don't grow, you kind of die. So you need the right team to kind of take that journey.
Okay, Anis, what about you? Again, not to sound repetitive, but product, person, or is it just the fact that, for example, it's a very niche thing as well, right? So if it's a segment of the economy which is very product driven, then obviously product matters. If like, for example, the medical industry, as Dr. Bhatti was just referring to, with you seem to be nodding in agreement with Ahmed when he was talking about the fact that even a mediocre product can fly, if the team is fantastic.
That's the point. That's where I started off. That for me, the first point, and for us as a syndicate, the three of us, the first point is always that, can we trust this founder that he will put in his best to make it work? And what Hadi was saying, that as angel investors, one of the things that we bring on the table is that because of our business experiences, we try to create a synergy somewhere. And that synergy is where we are going one-to-one. I look at Shoaib again, our chairman, who was always at it with the founders, just guiding them, mentoring them. Because I think as a syndicate, as we believe that it is a bit of our responsibility as well, that we have to give back to the society by mentoring these kids who are coming in with these brilliant ideas. So the focus for us, at least, is more on the founders themselves, and the product will ultimately happen. Yes, Dr. Saab is absolutely right that one of the elements that we always measure is that how scalable is the business idea. But then again, we're always prepared that they will pivot. They will be having failures as well. That's why it is a startup and not just a business.
Okay, before we get into other questions, just for the audience who's listening in, I just want each of you, and I'm not going to ask you to jump in this time, just to know, like, when a person does approach either of you with an idea, a product or a personality to match that product, or both, which are fabulous, what kind of a bare minimum or maximum, if you want to talk about your past investments, can they expect? And I'll start off with you again, Bhatti. So go ahead.
Could you explain this a little bit better, or a little bit more to me?
How much, like, based on your previous, Yeah, I'm saying how much is your minimum or maximum that you have in the past or moving forward would you expect to, can a startup invest if you were to actually go on board with them as an angel investor?
So I think it's a broad question because it depends on the stage of the company, but depending on what stage you're going in. As I said, because we're very product focused, we want to go in early. We typically go in pre-seed or seed stage. So usually the ticket sizes that we've done is about $100,000 to $300,000 at that stage. And we'll probably stick around the same size if we stay at that stage. If we start going into more of a series A or B or scale stage, then we'll look at a bigger ticket size. But so far, because we want to start early with the product, we try to go as early as we can.
Okay, and how much equity traditionally do you expect a startup to?
So that is not as important for us as the product itself, but often because the round, we let other people lead the round, so we let them set the valuation. So we're not very picky on what part of equity we're getting or how much equity we're getting, as long as we think that it's a great company to jump on. So we don't have any fixed rule or criteria on how much equity we need.
Okay, what about you, Hadi?
I'm in a similar boat as Dr. Danish just mentioned, in terms of equity stake. And then there are also the other side of me that wants a lot of it for less. But the thing is that it depends upon the business opportunity, depends upon, and I'm a strong believer that equity should not be cheap, but no matter the value. And I say that carefully because the business has to make sense, first of all, and the business has to be investable. The product needs to be, it has to have a vision, etc. But from my perspective, also to add 2 more cents to this is, we have to be able to understand how the valuations are actually also happening, because this is a very contentious subject. Is evaluation correct? How much X are we going? This, that, the other. And then it all unveils itself when we are actually in the due diligence phase, right? When things just come in front and then you're like, but why? Right. So but at that moment of time, you have expended so much amount of time, and your time is more valuable than anything. So my guidance there would be just to be able to figure out, and there's no exact science to this, right? But it has to be fair. And you have to ask that question to yourself when you're a startup, if it is actually fair or not. So that's where I'm coming from an angel investment perspective, because I've seen a lot of examples where the founders are great. There is a business opportunity, but there may be pre-revenue, or they may be in the revenue stage, but expenses don't make sense, and they're very far away from EBITDA being actually positive. Which they may have claimed otherwise, right? So that's something that I am on the look for.
Okay, what about you, Anis? Like when you were approached or when you have been approached in the past, what can people expect? And I agree that there are different stages where, a person, a startup will approach you. So if you could just actually even like sort of take it at the micro level, let's say a startup approaches you at a very nascent stage, and then they approach you when they are actually in the, generating a revenue in the secondary stage or the third. How do you differentiate, and how much would you invest, and how much equity is?
Our preference as a syndicate has been predominantly at the pre-seed or seed level. That's what we've been doing. But our ticket size we have been as a syndicate as small as $10,000, and we've gone up to $500,000 as well. And then we back the one we've invested in. We back them for the rounds, because when you take a decision, you really have this faith and trust on the founder as well as the business as well. But that being said, as a syndicate, we're pretty hands-on as well. One of the 3 of us is, taking a responsibility to be more involved with the startups, something which Hadi was mentioning as angel investors, we tend to do. So yeah, that's pretty much how it is for us.
Okay, what about you, Ahmed?
So again, I usually let the lead, usually an institutional investor, set the valuation. So I've never even looked, or I don't even remember actually most investments what the valuation was, because it's to be set at a later stage or at that stage by the lead investor. For me, I tend to kind of look at deals, or most deals are ones where I've been like in a position where I'm like thanking the founder for letting me be part of it. Like essentially, it's like, oh, this is awesome. They let me invest. This is amazing, right? So that's the kind of feeling I kind of leave with in that sense. Again, I have a little bit different experience. A lot of the startups in Pakistan, they usually need more help or assistance from angel investors just because of the ecosystem itself, right? You know, if you were to have any one of the distinguished people today here helping pretty much any startup in Pakistan, there's a big value add for them, right? So there's more a little bit hands-on stuff there. And but my general process is that, you know, if you leave with that feeling, that just means the founder, if they need something, they'll reach out. By default, as also a founder, you know, I appreciate the hustle and, you know, the fact that I don't want to be the one like hand-holding or kind of telling them you should do this or that or whatever. Like, you know, they want something, they'll reach out, and I will go out of my way to help in any possible way. But any founder by default, it's natural self-selection, should be able to pull through a lot of the stuff even without my or any investor's help. The investor definitely add a lot of value, which then you can capitalize on. There's high signal things, right? If you get investing from like, you know, Kleiner Perkins or something, everybody loves it. If you're in YC, that's amazing. It helps in hiring, it helps in like getting 1 or 2 introductions of customers. But I believe like no major VC even can like add so much value that you actually, you know, look back and thank them enough that they're like, oh, you saved us or something like that. It's just, it's a great nice to have, and some people can really make use of that, you know. But I don't think even institutional or Andreessen Horowitz even goes and like, you know, creates most of the valuation of a startup because of their efforts. Yes, the founders may be able to capitalize on the support and go all in a like hustle and, you know, use a lot of Andreessen's contacts and this and that. But the onus is on the founders and the founding team to kind of do that.
Okay, so, you know, sorry,
You
well,
know,
go ahead, please.
Yeah, I just want to make a small comment because we're talking about valuations here as well. So, you know, because the 3 of us as a syndicate, we come in from a manufacturing background. So, you know, what Hadi was mentioning, that the right valuations is very important. And I personally feel that we do not have enough of a strong, I would rather call it a system to evaluate if we are getting the right valuations, because I believe a lot of these are dependent on regionally some statuses which startups around the region basically get valuations. So in Pakistan, I think as investors, as startups, as VCs, we really need to work together to figure this out, that how can we improve this further. And we saw this happening during the recent downtime we've had sort of in the investment phase right now in this ecosystem.
100%. I agree. I think the benchmarking here is going to be crucial, right? How do we benchmark? Yeah,
Okay, I was
absolutely.
actually going to come to something that you know, Anis pointed towards, and he said, given the current downturn, there is a global downturn, but more specifically right now in Pakistan. So as far as the investors are concerned, you know, to all those people who are listening in right now, who do have startups and are hopefully potentially looking for angel investors, what should they realistically expect? Is there a downturn right now? If so, how badly are they going to be impacted? Or is there still space for that either perfect product or a perfect team leader, or both, ideally? Let's start with today's.
Yeah, I think the first of the things is that, you know, we again as a syndicate believe that it is such times, such testing times, where the opportunities happen as well. Not just for, you know, the people who are striving for new ideas and how to make it work or solve a problem, but also for us as investors, that we can actually enter at a value which can bring in some sort of good returns for us down the road as well. So it's a never a no from an investor's mindset, that we will never say that, you know, because of the current conditions, we are not investing. We are always open for investing. Yes, we would have more questions. We as a syndicate have a strong team of analysts who does a pre-research for us before it comes into the syndicate. So we would do that homework maybe more than what we normally do. We will not be going through the foremost of just getting into an investment and thanking the founder for letting us be a part of them. But we would never say no. So the window of investment is always open. It's about the right value at the right time and solving a problem which is not a repetition anymore. Because unfortunately, in the Pakistan industry, we see that a lot of repetitions are happening. I wish we had 5 more of Ahmeds here in Pakistan, and every day you would have a new, maybe a mini toothbrush or something coming around, and something new would happen. So that's lagging here. We need that to be more happening here in Pakistan.
Okay, Dr. Danish, what about you? I mean, you've very clearly said that you believe in products that are of high value and you believe in going in at a very early stage. So for you, is Pakistan still, like, even with the economic downturn, is it still a market where you are actively looking for such products? Or to make
I think we're definitely looking. One difference that I would say is that, so let me first say a positive thing that we're definitely looking because Pakistan has a lot of access to very high skilled resources that are harder to find here. So, if you have a project idea and you want to do R&D here for any healthcare related device or something, it's extremely expensive. And even if you were outsourcing it to China or India, it's very, very expensive. So there is a huge untapped potential for all the new healthcare R&D and products to be done in Pakistan. So that will always be a big appeal and attraction. The difference is that a lot of last 2 years, Pakistani companies were coming in with very high valuations given to them. And we had to say no to a lot of good companies with good product, but just because the price was just so high and the model just didn't seem to work. We just couldn't figure out with a given product what how they're trying to scale or will make it work. So, and as I said earlier, the challenge is that we don't set the price, we just follow it. So the price is for us, either we take it or we leave. We do give feedback to the people that about the product, what we like about it, what could be different, but we'll just walk away if the price is not right. So we have to walk. Even last year, we had to walk away 50-60% of the projects just because the valuations just made no sense. I think that hopefully will improve. I definitely see. I already know one of the companies we invested at had a down round. After that, and they had to do a bridge round to have enough of a burn capital for the next 18 months, and they had to do it as a down round at a discount. So that might happen. We definitely are hoping that we'll see better valuations for going forward for some of the companies. But and then I see some hesitancy, especially those who don't, people who are, so in our circle, most of the people are investing their own money, their positions with their own capital. So people are now more cautious about writing those tickets.
Okay, and on that note, same question for you, Hadi, and for you, Ahmed. Number one, so if we're talking about evaluations, what valuation company, would you respect more than others? And number two, the same question, do you still think that Pakistan has a viable ecosystem right now for startups, who are looking to get funded?
Ahmed, do you want to go first?
Yeah, so I think I agree with valuation. That is what he's just said. For me, also, I said a little bit before that I usually didn't really look at the valuation if it wasn't ridiculously high. There was a basic barrier where, there's a lot of, just because there was excess capital and, the macro was a certain way with zero interest rates even here, just because there was more capital, even the public stocks were high, everything was high, right? So everything just kind of adjusted. So you could, even despite that, sometimes see that there were some startups, raising money as a product it doesn't do anything, right? Like, yes, you raise a lot of money because you want to do X, Y, and Z. But what we were seeing was you can raise a lot of money at a big valuation because you can. There's a very big difference between the two, right? And just because there's surplus capital around. So that, yes, that was the minimum criteria. And a lot of principal investors kind of passed on a lot of deals. And now if they want to, they can easily invest in the same companies, startups, most of them, in down rounds. So now you're getting real valuations if you're sitting on good cash. But I would say that the sentiment right now, of course, is I don't even argue anymore that there's a recession. It's there, and it's kind of, I don't know, how deep will it go? In my opinion, is the question. But we have to remember this is where the kind of the kids get separated from the adults. It's a 5, 6, 7, 8 year long game in angel investing. But if we over-index on the recency effect, which is the last 5, 6 months or whatever is going to happen next, then are you even playing the right game? You can't do both. You can't have best of both worlds. You can't be like, oh, in 5, 6 years, I might have a great outcome or 20x or 30x of 2 of my companies, but I'm so scared of what's going to happen in the next 6 months. No, we can't predict anything. Like in December 2029 or 2019, we didn't know about COVID, nothing, the whole world completely changed. So you can't predict what's going to happen in the next X years.
What about you, Hadi?
Yeah, no, I look from my perspective. I echo all of the comments that have been made. I would just like to add one thing, right? So from a startup's perspective, when we're projecting how much we're going to earn, and this ties into how they're trying to evaluate themselves, and this actually also adds into markets, right? So your question around, are we going to be wanting to invest in Pakistan more, with all the downturns? I don't think that's a question in terms of will we absolutely will. I think there's a lot of potential, like everybody said. The question really comes around what is your operating currency? Is it, are you bringing in dollars or are you bringing in PKR? If you're bringing in PKR and you're doing your evaluation in dollars, where is this evaluation going in terms of how long do you think that this evaluation is going to last? So that, I'm not trying to make it a very complicated science, but it just needs to make sense. So I would just or in terms of try to figure out what would be the best way in terms of relating that and communicating that, in terms of your future onset, and then also couple this with your operating expenses and all of that kind of good stuff, because now with any market that today, be it whatever type of recession that you're going through, the expenses may increase even more because the regulations may change, etc. So those are the kind of things that we would need to watch out for when we are looking at particularly for a startup and the particular market that they're operating in.
Okay, Anisa, I'd like to ask you a question since you are from a traditional business background. How do you encourage or how do you facilitate or enable other businessmen, from brick and mortar businesses to sort of enter into the system and encourage them to be angel investors? And how does that actually, how does that play out? How does it happen?
I think one of the ways this does happen is that, especially for how the ecosystem has operated in Pakistan for the last few years, is that it has been the talk of the town. So it has not been us going to a lot of our friends from the brick and mortar side, but it's been them coming to us. And in return, again, as a syndicate, and what we've been taught by Shoaib all throughout is that this is our responsibility as well, that we keep people learn and guide them for how the investments have to be. One of the things that we really try to focus on is that, and that's, I'm telling you my own story as well, for how I was allowed by Shoaib again, that, I would put through a process to learn and not just come in and invest because I had the capability to invest. So I was made to do that. My friend Kashif was made to do that, that we had to go through the process of learning just to understand that why are we taking a decision to invest somewhere. So it's very important for a lot of our friends from the brick and mortar side to understand that this is a completely different domain we're going in. In our traditional businesses, the first thing we look at is the balance sheet and the P&L. And in these businesses of startups, this is completely irrelevant. Unfortunately, I went into one of the panels as a judge, and I saw a couple of judges who were colleagues from my brick and mortar industries. And their question to these poor founders were that, how much profit are you going to make this year? And these guys could just pick the idea. So, I was like, thank you, Shoaib, for teaching us that this is how the system has to operate. And that's, I think, one of our prime responsibilities right now, that we need to make them aware of the real scenario and what we're getting into. You're betting on a founder here, you're betting on an idea here, which can bring in growth. And then down the road some unicorns and exits, and Pakistan winning this Cricket World Cup as well.
Okay, thank you. We have 2 minutes before we have to open this up to questions. So my final question to all of you would be, how would the people who are listening in or who are interested, how would they get in touch with either of you? Because like I said, each of you has a certain specific niche. And right now we're all sitting in different parts of the world. So, you know, there's a huge audience out there. Dr. Bhatti, if people had to reach out to you, how would they do that?
Yeah, so our group is called Tajdeed. Our focus is healthcare related product. We have a website, tajdeed.us. You can also find me on LinkedIn. Many of my partners are on LinkedIn. I think that's the best way to connect, is to send me a message on LinkedIn. I hope everybody's on LinkedIn by now. I can give my email, but you know, I get 300 emails a day. So if it gets buried, you know, don't be surprised. Otherwise, hopefully LinkedIn will be much easier to grab my attention.
Great, thank you. So LinkedIn is the way for all of you who want to get through to Dr. Bhatti and are interested in healthcare. What about you, Ahmed? What is your niche? You have one.
So,
Yeah, get in touch.
One of the interesting things that I did in angel investing was there's a lot of areas that I really liked, but I didn't have the bandwidth to go start companies or products in there, right? So there are many, but I, at this point in time, because there was so much deal flow, so many deals coming in, so I decided to just invest in a fund, which is Indus Valley Capital. I'm a full disclosure, I'm an LP limited partner in there. So I just let them decide on what they're doing. Atif Awan is amazing, of course, but I still every now and then I'm making like investments here and there. Very easy to find on LinkedIn, reach out, and it's always good to know like what kind of you're working on. And I would always suggest like kind of start with some hello, hi, or make a small relationships. It's very annoying to get these 40 paragraph long thing and just like, this is what we're doing, we want investment. It's hard to even make sense of it. Just like short and sweet, here's what we're doing, this is what we need help in, or we'd love to know more, blah, blah, blah. So reach out on LinkedIn, very easy to find.
Okay, so LinkedIn as well, and they can save the long 1 hour presentation for when they actually get through to you. What about you, Hadi? LinkedIn again?
Yeah,
I'm guessing.
LinkedIn again. LinkedIn is the best for now. Yeah, and my niche is healthcare. I've been in healthcare for about 18 years now, health tech specifically. Data and data science is what I've been involved in for the last, I don't know, 10, 15 years. And so that's pretty much my niche. And, you know, as far as portfolio of investment is concerned, it's all over the place, but sustainability is the theme, and also agriculture. So I love those areas as well.
Okay, thank you. And what about you, Anis? LinkedIn and the niche?
Everything works.
Sweet.
You know, everything works for us. You know, we're very clear that we need to give each and every founder, good or bad, the respect that they need, the encouragement that they need. So a small email, a big email. We've got a fantastic team of researchers with us, Usman and Manahil. So, you know, we respond to every email. We make sure that, you know, we give an answer. As a syndicate, these were our founding. So LinkedIn, email, everything works for us. And we will get back.
All right, great. So we thank you. I hope that was comprehensive for everybody who's watching. And if you have any questions, please do message me and I will read out your question. We just have one new we have a message from a gentleman called Zishan. He says, I'm working to solve a problem to change Pakistan from developing into developed. I made a 10-year plan and pitched it to an accelerator located at the University of Cambridge, Himalaya.cam. My demo day is 16th December 2022, so good luck from us in advance. One of the VCs interested in buying my company, Accelerator Director, told me it is a fintech product. I do not want to take money from Morgan Stanley, JP Morgan, and other financial institutions who are mentors and investors. I want Pakistani angels to make money on this venture. I already have consumers who will buy products. So he says that he is interested the question was, please share your email or phone number. Okay, so I think we've already answered that question, Zishan. LinkedIn for Dr. Bhatti, Hadi, Ahmed, and Anis, on the other hand, is open to emails, LinkedIn, direct messages, try to keep it short and
Can I just add real quick? I mean,
Yes.
from what I understand, I think it's great that you want Pakistani and local angels and all to invest and make that money and be local. But in my opinion, if you are getting interest from JP Morgan or whoever, personal interest and preferences aside, I would say prioritize your startup and business more. While they're phenomenal, I mean, I'm sure Steve Jobs had personal whims that he just catered to, but that was Steve Jobs. I'm not even close to that ever. So if I had a lot of interest from one of these big names, very strategically and based on the terms that I would like, I would care about my business first. And it's okay to have that strong personality. And a lot of early founders, they are the business, but think again, I guess, and maybe reconsider.
Anyone else who has advice for Zishan on him? I mean, I think it's commendable that he just wants to have angel investors. Yes, Anise.
Listen to Ahmed.
Listen to Ahmed. Okay, Zishan, listen to Ahmed. Next question from Abdul Samad. His question is, how much traction is good for a startup raising an angel round? And does having subscribers count as traction? Who would like to answer that question?
Loaded question. I mean, yeah, you look, I mean, having subscribers, it depends on what business it is. It depends on what you're trying to do. I mean, it's a very broad type of a question. It needs to be honed in a little bit. If you're saying your business is like Netflix and you're trying to get subscribers, it's a different ask to where you're becoming Facebook and it's a different ask. Right, so these are the different types of things that we need to be looking out for, and I think how much attraction is all relative, because you could come in as you know, pre-revenue as well, and it could become like all the gentlemen today were mentioning, it could be a great idea, and we are betting on the founders, we're betting on the idea. And so there's no great time or no right time. The time is when you are seeking out to take this forward, and what type of help do you really need. And that's for you to decide and how to come in and ask for that help.
Okay, Dr. Bhatti, what about you? Does subscribers count as traction? How much traction is required?
I think in some sense it does, but you know, one challenge I see in the last year or so is that there was an overdue focus on KPI and overdue focus on just increasing the subscriber round at the cost of profits, at the cost of just giving free. We see what happened to the Kareem saga. So I don't think that just having a lot of subscribers, I see the same issue with telehealth companies. You know, these, you know, patients in Pakistan, you offer free visits or something, you will get, you know, over 900,000 people sign up to start the doctor. That doesn't mean they want to pay for your service in the future. So I think there's an over stress on this, but yes, in general, you want to have some traction.
Okay, so the gentleman who asked this question, oh, Zishan says, got it, thank you for the advice. I think Ahmed, you kickstarted it by saying, if JP Morgan is interested, go for that. Abdul Samad just added a little bit. I'm going to take very little time to read out what he's saying. He's saying, the gentleman who asked the question about how much traction is good. He says, I'm building a tech platform for matchmaking with increased marital satisfaction, personality compatibility, and decreased marital conflict, risk of divorce, risk of physical and psychological abuse. So I guess that's why he was interested in subscribers as traction. So yeah, Abdul, I don't know if that's a question.
then it, yeah, I mean, if he means traction as in people are starting to use their product, makes sense, right? The next obvious question is what is your revenue model, right? What are your expenses, et cetera, et cetera. So I think that will be the next logical way forward.
Okay, thanks. The next question is from Fahad Rafi. His question is, how do you evaluate Pakistani companies' ability to eventually pay back long-term investors if operating currency is PKR, in Pakistan, 7 to 10 year out government policy on forex exchange rate, etc., or is it purely a bet on the ability to resell your stake to the next investor? Anise, I'm gonna throw this question at you.
I think it's a combination of everything, but we do see a lot of prospect here in the Pakistan market because it's still a very starting up market, and as an investor, if I see it from a global investor's perspective, you always want to get into an investment you want to invest into a startup where you see a moonshot, right? So Pakistan market gives a lot of opportunity to the international investors for that aspect. And I think the opportunity is huge. I think what we really need is a shift where the thought process of our startup industry needs to transform from the fact that we just have to pick up an idea which is happening somewhere in the region and just copy it here and then make a case out of it. Let's try and bring in our own ideas and let's try and solve the issues which are actually there for us.
Okay, and Ahmed, what about you? How do you evaluate the company's ability to pay back if it's in PKR?
Right. So yeah, usually I'm not necessarily looking for like offloading it to the next sucker, I guess, but it's more about it's more about sorry.
Right.
It's more about there's a lot of exchange rate risk and all these things, but that's priced in. When I have to look very closely before I invest anything in any angel investments in Pakistan. And I have a lot of this feeling of, hey, let's invest in Pakistan. I'm from there and this and that. But at the end of the day, this is not it's not a social cause, it's not charity, right? So I want to see some returns, but it's already priced in. So from my perspective, I'm comparing it to US deals the same way, more or less. So that risk needs to be compensated by a lot. So for example, if you were an early investor in Kareem, let's say you did really well, even if the other portfolio went down, and you probably did a lot better than many US deals. Now, the advantage I have is that I have easy access, actually inbound access to potentially the next Kareems and the Razes of the world, right? Which I may not have to the next Ubers and Facebooks in the US, right? So I'm looking for kind of that impact or that scale, which exchange rate and all these other risks will be like whoever 50x their money on Kareem, what all the risks paid for, right? So it's hard to spot that, but the ecosystem needs to grow and kind of go through its own challenges while as these players keep emerging in the next 3 to 6, 7, 8 years.
Okay, but Dr. Bhatti, you are, I mean, if I'm not mistaken, the mindset that you are seeing products which are coming out of like innovation in Pakistan. So you don't see any dearth of that, which is, I guess, important. And so when you decide to invest in these innovative startups within Pakistan, is it a consideration for you as well, as far as the 7 to 10 year government policy on exchange rates and stuff is concerned, or is that something?
So I think that's a very good question. The way we look at it in the healthcare sector is that we want products that are not specific to one specific patient population. And we want innovation that is true innovation, not just something new for Pakistan. Everything will be new for Pakistan in healthcare, right? But what we want, so that's where we come in. We can tell them what the cutting edge is, what is the new innovation happening in US, where is healthcare right now in terms of certain diseases. So we want to push the founders and engineers to design products that are at that cutting edge. So those products will be competitive in North American market, in European market, any market, because it's a true innovation. It's something that doesn't exist, not necessarily in Pakistan. If something doesn't exist in Pakistan but is everywhere else, you could just import it. That's not a startup. That's not an innovation for us. A startup would be really creating something that they can then just send everywhere. So what we're hoping for is that a lot of our products will actually then go across borders. Will help them bring to North American market, have buyers here, distributors here, will take them to European market, Middle Eastern markets, China, India, and so on and so forth. So if it's a true innovation, if there's something new that have come up with, then the whole world is your marketplace. So you can really bring it everywhere. So that's where we're looking. So that's why we're not that concerned about marketplaces. And often when we're doing something big or looking at a big product, we don't even calculate what profit or revenue they will have from Pakistan. And we will really focus on the profitability or revenue from the international market, especially North American market where we're personally based at.
Okay, so we have 3 minutes to go before we have to wind this down. Final question to each of you would be, for people who I'm sure want to know the answer to this, as investors, what is the one thing that is a red flag to you automatically that startups should be aware of? And let's start with you, Hadi.
Founders chemistry.
Founders
So-
chemistry.
Yeah, I mean, if that is not there, and if they are not committed, like they already have, they're 25% FTE in that particular startup, for example. I mean, it just tells me you're not there. And if you want my money, for example, what is it that you and you're asking for value in terms of my time as well. So what is it that you are going to put in from yourself? And is there there have been many times where the founders are not agreeing with themselves during pitches. So there's been like one of those situations as well. So those are definite telltale signs that things are not very well thought of or figured out or even aligned with, right? So the communication between them and even the companies coming back becomes even more difficult.
Okay, I'll come back to this question and very quickly because I don't want to miss that. This last question I'm taking from the audience. Naman Akbar, so far the prospective investors I've talked to are looking for digital products as opposed to asset-based startups. What is your take on this and what is your advice for asset-based startups seeking funding? Who would like to answer this question?
I will quickly say that for me, the asset base will be something
Sorry,
like
yes,
a physical
Mahmood.
product, as in engineering design, like a physical product that you can hold, and we love those. I think software solutions are oversold. We love coming up with something physical.
There's never a bar for that.
Okay, Naman, so I think you got your answer. Red flag, Anis.
I think it's the truth that is the truth there, and the numbers are adding up. And when I say numbers adding up, I actually mean that what they're saying, they have enough homework for it, because when we're sitting on the other side, we have done our homework before they walk in. So whatever they're saying has to come in with a lot of heart and commitment of telling the truth.
Okay, Ahmed.
Absolutely. No, I think definitely the founder chemistry, and definitely I don't have as much to add as after Anis and Adi, but I would say it's very hard to quantify, but I try and look at the motivations of why they're even doing this, right? Is it money? Yes, a lot of these outcomes, even as investor, you're looking for that X return, but there's also other kind of motivations that we're, if you look at that cliche Maslow's hierarchy need of like basic stuff and then whatever you want. Is it up that kind of triangle where they really want to win in this space, they want to prove something, whatever it is, in addition to the money? Because there will be so many challenges, and on a daily basis, you will not be thinking about your P&L and this and that when stuff is breaking or when somebody sues you or whatever. You might just want to bail, right? And so it's very hard to quantify. I try and somehow see that they're motivated past the dollar values. And there are various things that even I don't understand my own motivations at times, because I'm like, okay, here's X outcome, you get it, but I still want to do more because of blah, blah, blah. So it's good to see that spark.
Okay, so passion and honesty. Yes, Anis.
Keeps the why. So I'm with you spot on, the why.
Yep.
Okay.
If there's no why, it's kind of a red flag, but yeah.
Okay. You got to have a rock solid narrative and all the data to back it up with the passion to throw in. So it's a tough one. Dr. Bhatti, what about you? What's a red flag for you?
I think the same thing, but the way I will say it is that what I look for is the clarity of thought. There's a lot of sometimes pitch is very vague, and you're not sure what the founder is going after. So if they don't understand the problem properly, or if they don't understand how their solution is solving that problem, that's just a big red flag. And they're just kind of trying to just skim the system or do something or put something together. If they really don't have an understanding of what exactly they're solving and how they're solving, why their product is solving a pain point or needs to exist, rather than just buying someone that already has something.
Okay, I was going to wrap this up, but just one final question. Sorry, guys, just bear me with you. We did start 5 minutes late. So final question from Dr. Asim Javed. His question is, what's the future of sports nutrition in the startup sector, as much as angel investors are either into tech-based startups or health tech in Pakistan? And who is the right person? Let's start off. And who is the right person to assist in evaluating business? Let's just do these two.
So the question is about sports nutrition.
Sports nutrition. future of sports nutrition in Pakistan. Because it seems to Dr. Javed that most angel investors are either, super focused on tech-based startups or health tech. So he's talking about sports nutrition. That's the first one. And the second one is, who is the right person to assist in evaluating a business?
Okay, I could take the first one just a bit. I'm not a doctor, but I can have Dr. Tanish, but you can chime in as well. Nutrition is not an exact science. We all know that. Otherwise, we will all have six packs. But the thing is that is this a blank field, a blank canvas in Pakistan? Absolutely, there is a lot of potential in this space, especially in sports. Nutrition, I think we have a long way to go in terms of building that prowess back again to when we were the champions in squash, for example. And then there is also the fact that are we more focused on tech? It all depends on the type of skill sets that we actually have at the moment of time. But yes, there is potential. Valuation wise, who is going to be the best way? What is going to be the best way, and who can do the best valuation? That I leave to others in the group, because I usually do seek my own help, and I do it myself in a way, not the exact science, but hey.
So if you guys had to point somebody in the right direction, Emma, Denise, Dr. Bhatti, whom would you point them to?
I mean, for valuation, I'm not sure. I think it's an art and science, so there's no real, even here, like, if you go ask like the top 10 firms, how do they evaluate your seed, pre-seed? Nobody knows, like literally, like it's just a market thing and this and that. 5 million cap, 7, 8, 10, just people just kind of make it up and kind of agree. So there's no one person or resource that I can point you to. As a founder, it's very good to kind of stay on top of what's happening in the market. There's all these podcasts, like in the US, at least, it's All In podcasts that I listen to, and a few others that kind of give you a sense of, or just reading news on Crunchbase, TechCrunch, or even in Pakistan, seeing where things are. And in terms of the sports nutrition, I would just say, I don't know much about the space, but if I were to learn more about it, I would just say, rather than an industry, look at the problem, that if it exists or not. The short answer to how big or how important it is do people care about it, or do people think they care about it? Just find a way to see, like, if there's a few hundred or a few thousand people who will really care or not. That'll give you the answer of like how big or small the industry could be.
Or find an angel investor who can make people care about it.
Well, hard to create demand.
Yeah, just to add on to this, ultimately the right valuation, I believe ultimately the right valuation is where you're actually able to raise the money. And the founders as well as the investors have to understand that in the last few years, which is natural with the trend coming in, the valuations really got overblown. And then now we see them coming back to levels which are more investable, I would say, as well. There is no hard and fast rule for it. You have to just stay alert as an investor, as a founder, and you keep tapping at different things before putting in your money or you're asking for money. So it ultimately has to be the market which has to determine where the right valuation is, I believe.
Yep.
Okay, well, thank you very much, all four of you, for having taken out the time. Some of you have stayed up late, some of you have woken up early. I think we can kind of like sort of end this conversation with the fact that there is money. There are angel investors who are still looking very much to invest within Pakistan, in Pakistani startups. What they're looking for is passion, innovation, integrity, and truth. So thank you for watching. I hope you enjoyed this webinar, and see you next time.
Thank you so much, my son. Thank you, everybody.
Thank you. Thank you so much.
Thank
Thank you.